stressed out around tax time, feel like it's a huge burden, that you don't know where to start, it's all smoke and mirrors as to what to do, then you're not alone. Stay tuned for this video where I go through my top tips to lodge your 2026 tax return. First off, I'd like to introduce myself. My name is Tally and I'm a finance professional, but more so I'm just here sharing my personal tips when lodging my annual Australian tax return to the ATO. So some things that I've learned along the way. Before I start, for those that are really just need a head start on where to start, you should first register for myGov account. It's Australia's portal for all Australian government items. So sign into your myGov account, link the Australian Taxation Office if you haven't already, and then select View, then link Services, choose Australian Taxation Office and follow the prompts. From there, you go to Tax, Lodgements, Income Tax, and then prepare or lodge returns. If you're watching this video pre-30th of June, you won't have a 2026 option to press and lodge your tax return. However, post this, there will be a link post the date of the 30th of June. So my first tip would be to wait for August of the following financial year to lodge your tax return. So if, for example, you are lodging for your 2026 tax return, that's the financial year 2026, which ends in June in Australia, then I would recommend lodging in August 2026. So that's 2 months post the tax year end date. And the reason I say this is because you want as much information to pre-fill from the ATO as possible. What does that all mean? If you haven't already filled out a tax return before, the ATO, Australian Taxation Office, links with all employers, it links with banks, governments, registries, digital platforms, making it easier to identify what you accumulated in the year. So this is a great way to just take out that burden where it's going to automatically data match to you. The next item to note is the last date to lodge your tax return is the 31st of October of the following financial year. So if I was to lodge my 2026 financial tax, then I would be talking about October 2026 being the last month that you can lodge your tax return. After that date, you'd actually have to pay for a tax agent to lodge any tax returns. So if you've missed a year prior to FY26, then you will definitely need to engage a tax accountant to lodge your previous tax returns. My second tip would be to move to deduction by industry. The ATO has done an amazing job in collating all different ATO guides that has specific deductions for your particular type of work. So for example, I'm going to search here what it looks like to search for a nurse. So I type in nursing deductions ATO into my browser, and from here you can see the PDF that pops up which lists what I can and can't deduct. What to note is that the ATO allows for work-related deductions up to $300 in accumulation without a receipt. However, anything over that, and you'll need all the receipts for all those deductions. And you'll need to keep those records for 5 years because you can get audited. You need to have paid for them yourself, i.e. you can't have been reimbursed by your employer, and they need to be directly related to earning your income. So for example, if I was a nurse and I wanted to claim something like scrubs, but work actually reimbursed me for the price of those scrubs, then that would not be an allowable tax deduction. I won't give too many more examples because it's best you check the industry guide for your specific profession, because the ATO knows best and that's definitely the source of truth. This is more a fact-finding exercise on where to find the information than me myself having any answers for you specifically. I then do the estimate button. So once you've done that you've put your income from your pre-fill, your deductions per what you've looked up, then I would go scroll all the way to the bottom and click estimate, and this will allow you to work out if you're owed money or whether you're going to get a reimbursement. Now it's important at this stage, if for example you are ready to lodge, to double check your details and check that the correct bank details are there for you. So if you've recently changed banks, it would be important to make sure that the bank account you had last year that maybe you've closed, or that subsequently isn't something that you use, you can update that so it goes straight into your normal everyday work bank account. Then if I owe money, typically for me personally, I'd wait a little bit longer to get my finances in order, because obviously you'll only know how much you owe until you do the calculation. And I'd wait a little longer to lodge, but definitely before the 31st of October, so that I can take advantage of sure that I can meet my immediate personal financial commitments without feeling like I need to submit and then be in a bit of a pickle. So I knew a few nuances here, and I won't get into too much detail because I'm definitely not the expert on tax, but I'm just sharing a few bits of wisdom. So there's the Medicare Levy. This levy helps Australian public healthcare system. So generally 2% of your taxable income will go towards that. Most taxpayers pay it and it automatically goes through their tax return. Of course, low income earners may receive a reduced levy or exemption. And this is actually separate from the Medicare Levy surcharge, which only applies to higher income earners that do not take out private health insurance. So what that means is everyone pays towards the public health system. It's 2% of your taxable income. But then if you're on a higher income, you will also be subject to the Medicare Levy surcharge. And the only way to not have that surcharge is if you have the appropriate private health cover taken out for the entirety of the year. The second item is a HECS-HELP student loan, which you'd be familiar with if you have a university loan with the government. And this, if you haven't been ticking that box on your current employer as needing to pay for a HECS debt throughout the year, this will come through on your tax return as owing money to the ATO for all those payments that haven't been made during the year. So those repayments are compulsory once your income exceeds the annual repayment threshold, and repayments are calculated as a percentage of your income and collected through PAYG. The debt is indexed annually but does not incur interest like a commercial loan, which you would know already if you're familiar with that system. Then you have other income. So this might not have been pre-filled by the ATO, but definitely important to record it and make sure that you're being ethical. So they could include other bank accounts maybe that weren't picked in the pre-fill, rental income, side businesses or freelance income, foreign income, director fees, government payments, all classed as different things on your tax return. I won't go into too much more, but there's obviously declaring shares and also any CGT impacts throughout the year. But again, if you're someone who has a more complicated tax return, it might just be worthwhile contacting a tax agent to get that professional accredited help. But these are the links to where you would source information, but the best advice would be to seek professional help if it's not clear from this video. Thanks, bye.